Welcome back to another episode of Market Brief After Hours. It is great to have you with us as we break down the trading day and look at what is moving the needle in the global economy. Today was one of those days where the bulls really seemed to regain their footing, wasn't it?
It certainly was. We saw a really interesting session on Monday. It felt like the markets were taking a deep breath after last week's volatility and deciding, okay, we're ready to go higher. The headline story is definitely the technology sector, powering a second straight advance for the S&P 500. But there was also this undercurrent of cautious optimism. Investors are clearly keeping one eye on the charts and the other on the upcoming data calendar.
Let's get right into the numbers because we saw some records broken today. How did the major U.S. indices wrap up?
It was green across the board. The Dow Jones Industrial Average managed to inch its way to a fresh record close. It added about 20 points, or just 0.04%, to finish at 50,136. It's a modest gain, sure, but it reflects a lot of resilience, especially holding above that psychological 50,000 mark.
And the S&P 500?
The S&P 500 extended its rally for a second day, rising 0.47% to close at 6,965. That move was really supported by large-cap tech and semiconductor stocks. But the real star of the show was the Nasdaq Composite. It outperformed the others, jumping 0.9% to finish at 23,239.
That is a solid showing for the Nasdaq. What was fueling that engine?
It's the usual suspects, but with renewed vigor. We saw strong advances in Nvidia, Broadcom, and Oracle. The artificial intelligence narrative is still very much alive and attracting inflows. Investors seem to be shrugging off some of those lingering concerns about valuations and are rotating back into growth.
Now, this optimism wasn't just contained to the U.S. It sounds like Europe was having a party of its own.
Absolutely. European markets extended their record-setting run. It was a broad rally. You had the Stoxx 50 climbing 1% to 6,058 and the Stoxx 600 rising 0.6% to 621, both historic highs. It seems investors there are rotating back into banks and industrials.
Which countries were leading the charge over there?
Germany's DAX was very strong, advancing 1.2% to 25,005. But Italy really stood out. The FTSE MIB surged almost 2%, 1.98% to be exact, closing at 46,784. France's CAC 40 added about 0.5%, and even the UK's FTSE 100 managed a gain of 0.16%, closing at 10,386.
I noticed banking stocks were mentioned as a key driver in Europe.
They were. UniCredit jumped more than 6.4% on strong earnings, which really lifted sentiment for the whole sector. However, it wasn't all good news in banking. NatWest took a heavy hit, falling around 9% after they announced a £2.7 billion acquisition of Evelyn Partners. The market clearly wasn't thrilled with that price tag.
Shifting gears to Asia, we saw a massive move in Japan. What triggered that?
That was a reaction to politics. The Nikkei 225 surged 3.9% to close at 56,364. This rally came right after Prime Minister Takaichi's decisive election victory. The market is interpreting this as a green light for pro-growth policies. It was a rising tide for the region, too. South Korea's Kospi surged 4.1%, and Thailand's SET jumped nearly 4%, following their own election results.
It's fascinating how quickly political certainty can translate into market gains. Before we move on to the technicals and currencies, let's touch on commodities. Oil is climbing again.
It is, and unfortunately, it is for the reasons we usually dread. Geopolitics. Brent crude gained 1.45% to just over $69 a barrel, and WTI was up 1.27% to around $64.36. This is driven by renewed concerns in the Strait of Hormuz. U.S. authorities actually warned vessels to avoid Iranian waters, which revived fears about supply disruptions.
And briefly on the bond market, are we seeing any drama there?
Surprisingly, no. It's very quiet. The benchmark 10-year Treasury yield held steady at approximately 4.2%. Investors are in a wait-and-see mode. We have a heavy data calendar coming up that was delayed by the government shutdown, specifically the jobs report and CPI. Until those numbers drop, the bond market seems content to hold its breath.
We are going to take a very short break. When we come back, we are going to dive deep into the Forex markets. I want to hear about those moving averages. And we'll look at the specific stocks that made huge moves today, including one that dropped 55%. Stay with us. Welcome back to Market Brief After Hours. We've covered the indices and the global picture. Now, let's get technical. The currency markets saw some significant action today. Let's start with the euro against the dollar.
The Euro-USD pair is looking very bullish. It closed up 0.85% at 1.1916, finishing near the highs of the day. What's critical here is the structure. The price is firmly above all the key moving averages. We are looking at the 50-day moving average at 1.1736, the 100-day at 1.1680, and the 200-day at 1.1621.
So stacking up nicely above those averages.
Exactly. It confirms a strong bullish structure. Momentum has accelerated after clearing prior swing highs. Immediate resistance is right there at 1.1927. As long as it holds above 1.1916, the focus is on further gains.
What about the British pound?
Similar story. GBP USD rose 0.62% to close at 1.3696. It's trading well above its 50-day average of 1.3477, and the 200-day is down at 1.3431. The pattern of higher highs and higher lows is intact. Resistance is at 1.3701, and if it breaks that, we could see a run toward 1.3850.
Now, not everything was gaining against the dollar, or rather the US dollar had a mixed day. How did it fare against the Canadian dollar?
The greenback struggled there. USD CAD fell 0.82% to 1.3558. This is a bearish trend. The pair is well below its 50-day average of 1.3773 and even further below the 200-day at 1.3823. We are seeing lower highs and lower lows. Unless it can get back above 1.3600, the downside bias remains dominant.
And the yen?
USD JPY slipped 0.84% to 155.87. It's a bit of a pullback. The price has fallen below the 50-day SMA at 156.29, which suggests some short-term selling pressure. However, it's still above the 100-day at 154.33 and the 200-day at 150.26. So for now, this looks like a corrective phase within a broader uptrend.
Before we leave currencies, the Aussie dollar had a big day.
It really did. AUD-USD surged 1.20% to 0.7095. That is a breakout. It's trading way above the 50-day at 0.6746. When you see a move this strong, closing at the session high, it signals powerful bullish control.
I also saw some eye-watering numbers in the precious metals market. Gold is above $5,000.
It is. Gold reclaimed momentum, rising 2.28% to close at $5,080. It's well above its 50-day average of $4,554. But the real explosion was in silver.
How big of a move are we talking?
Silver surged 7.24% to finish at $83.60. That is a massive move for a single session. It's well clear of its 50-day average at $77.27. This kind of breakout reflects strong speculative buying and momentum.
Let's wrap up with the market movers, the individual stocks that made headlines. You mentioned Oracle earlier in the context of the Nasdaq, but there was a specific reason for its jump, right?
Yes, Oracle advanced 9%. D.A. Davidson upgraded the stock to a buy. They cited optimism around OpenAI-related growth and the company's capital strength. It's another example of that AI halo effect we talked about.
On the flip side, we had a massive drop in Kyndryl. You teased this before the break, down 55%?
That was a brutal session for Kyndryl shareholders. The stock tumbled 55% after they disclosed an audit committee review into their cash management. To make matters worse, the CFO and general counsel are leaving. When you have governance issues combined with executive departures, investors head for the exits immediately.
That is a crisis of confidence for sure. We also saw some drama between Novo Nordisk and Hims & Hers.
A bit of a battle there. Novo Nordisk gained 3%, while Hims plunged 16%. This happened after Hims & Hers withdrew a competing weight loss pill following legal pressure. It's a clear win for Novo in the competitive weight loss landscape.
And finally, AppLovin. They had a good day after some rough patch.
They did. Shares jumped 13%. This was a relief rally. Capital Watch apologized and corrected a previous money laundering claim that had been weighing on the stock since January. With that cloud lifted, buyers came back in.
Monday.com didn't fare as well, though.
No, Monday.com slid 22% to a 52-week low. They issued soft guidance, and interestingly, they cited uncertainty around how artificial intelligence is going to impact their business model. It's the other side of the AI coin, fear of disruption.
It really is a stock picker's market right now. So looking ahead, what is the takeaways for our listeners as we head into the rest of the week?
The market's rebound suggests the appetite for tech and growth is still very robust. However, we have to be careful. The focus now shifts to that delayed economic data. We have the employment report on Wednesday and the inflation reading on Friday. These are going to be the major catalysts. The Dow's record run is impressive, but its sustainability depends entirely on whether the earnings and macro data can support these valuations.
We will certainly be watching closely. That is all we have time for today. If you find this useful, please follow Market Brief After Hours so you never miss an update. Thanks for listening.